Hey everybody, this is Bob with my good friend Phil here from Trade Genius. We want to talk to you about something. I think the market's on thin ice, and we're going to show you why. Stay tuned.
Trade Genius.
Okay, Phil, tell us why we shouldn't be on this ice skating here in April.
Right. So I'm not going to get too technical here to keep it simple, but you see a couple lines on the chart and you see some circles here. And the one level that we're looking for particularly is that turquoise line, which is what they call implied volatility. Another way to think of this is some of you have heard of the VIX, which is the volatility index. It usually moves inversely with the stock market. So if there's a lot of fear, then the VIX goes up. And usually that coincides with the market tanking, and vice versa. If the market's going up, there's not a lot of fear, and the VIX is usually down. So what it's implying here is that we're in another area like we were back in January of 2022, back around the middle of between March and April of 2022, at the end of middle of August at 2022. These are, if you recall, these were all areas where the market topped out. And more recently going into December. So, and here we are again at comparable levels being oversold. So what that translates to on the S&P 500. So this is the S&P 500 chart. We'll move Bob down a little bit so you can see. But basically those circles, where we had those circles on the other chart where they oversold volatility, that's what it looks like on a stock market chart. Specifically the S&P 500 here. So, and you can see we're coming up again over there on the right, 39.83. And it's implying that we're probably going to peter out here, at least in the short term, and run out of juice. Also, too, as we update in the newsletter, the fuel for the market, the derivative fuel, is kind of petering out here into that 4,000 level on the S&P 500. So it's our feeling that very risky spot right now to be initiating any new long positions. And we have to respect the fact that we're in a bear market and potentially can be moving down from here to new lows. Every time we've gotten to one of these areas where it's circled, nobody thought we were going to roll over and head for new lows. Nobody was talking about that. You didn't see it on Twitter. You didn't see it on the headlines. And that's by design. The institutional players will actually pay for headlines to be run so that they can get liquidity from the retail crowd. I mean, that's a known fact. And what we're seeing this week on headlines is what? Oh, the Fed has to play catch up. The market's going to be right. The Fed's going to be wrong. But the Fed's been out in force constantly saying, don't fight us or you're going to lose that game of chicken. And they could easily go with a higher interest rate hike and prove their point if they feel like this market just isn't getting the message. And repeatedly, Powell's come out and said that, and it's kind of like another situation where he's like, don't make me come back here and give you guys another Jackson Hole moment where he announced that, we have to take the medicine now. Because he very well could going into this next meeting in February, where I would guess they're probably going to give us a 50 basis point hike based on the behavior of the market here versus 25. So that's what I wanted to point out to you guys here, was that we're in a bit of a danger zone here, even though there's some euphoria in the air and people think the new bull market has started. Just a reminder that they've thought that 4 times so far in this bear market, and this looks just as dangerous as those previous times. And fundamentally, we really haven't seen anything change. I think we're seeing slowing in the economy, and the yield curve is also severely inverted. These aren't things telling us that we're off to a new bull market. This is things telling us that we probably got one final leg of pain, at least in this market, and it's going to give us new lows. And so, yeah, I wanted to share that. And Bob, I don't know, what's your thoughts on the situation here?
Well, I totally agree with you, and I'll just add some color. Also, what you're seeing here in this push in the market in the last 6 or 7 trading days has been a lot of junk. So companies going bankrupt, meme companies, the crypto miners, and penny stocks, and what they call low float, high beta names were just all ripping. And they're just using the options markets to drive the prices higher for the reason that you explained. Look, they have to sell to you to be able to get out. And so we're also seeing it, in the options market too. Behind the scenes, they're buying VIX calls into the next month. and they rarely buy VIX calls because they like to short VIX for reasons why we just explained. And so it's going to be a problem. And look, the CPI print coming out next month is going to be higher than last month because oil's up 16% in December and food prices are up 13.3%. So when those numbers start cycling through, we're going to start seeing the flattening of that improvement. And I think it's going to scare people right after the Fed meeting at the same time. So I think we're going to go into a winter of discontent here. And, this week's kind of sloppy. And then this next week coming, it's going to be really interesting because it's OPEX week. So it's going to be probably really volatile.
Right. Yeah. So I guess I would leave you with, if you're a short-term position trader, probably a good spot to take some profits off the table. You could even entertain maybe going inverse with some inverse ETFs or puts, or shorting the market with the futures, which in the room we had entered short on the futures going into the weekend. Could it go up some more, a little bit more? Yeah, it could. But I think the larger risk is down here. And if you're in 401ks, look into your cash equivalent options, because a lot of times they do have a fund that's equivalent to cash, and you can actually move your stuff over into that. So if you're concerned about enduring a drawdown from here in your 401k, those are options that you can use too. So that ultimately you have to make a decision for yourself, but those are some options if you are curious that you can do when we get into these situations. So with that, Bob, I think that'll wrap up this episode.
Yeah, you guys have a great weekend, and we'll catch you on the flip side. Remember, the market's closed on Monday, kicks back off on Tuesday. Short OPEX week should be pretty interesting.
Agreed. All right, guys. Thanks for watching. Please hit like and subscribe. We'll see you on the next one. Take care.
Trade Genius.